take advantage of this side of the view too. We had a brief discussion now about also Bitcoin. I know within financial service, that's part of the discussion of the trends of what's happening. But I'm really looking forward for sort of our quick chat here about where financial service and fintech it's going to. So I'm very, very glad here to be interviewing Kai Schmitz. You are doing investments through IFC in financial service in Latin America and also Africa and other places. So I bet you have a very good overview of what's happening in emerging market and all the different trends that where we're sort of heading to. And that, of course, it's quite relevant for us in Brazil too. So thank you very much for joining us today.
Thank you for having me.
And then can you give us sort of a brief overview of your background? Because right now you're wearing the hat of investor, but you also are or were an entrepreneur. I guess when you are an entrepreneur, you're always an entrepreneur. So maybe just give us a very quick overview on your background. And how did you get into the role today?
Sure. After my MBA, I started my first company, which was in London, and the idea was to become a foreign exchange trading platform, but we ended up as a money transfer company. So if you want to pivot, there is one for you. That went quite well until we got into the internet crisis, and then it didn't go so well anymore. So we, in the end, sold the company for coffee money to our main investor. And after that, I started another company, which then was a remittance company called MFIC, and we were essentially operating a platform to send money to some 60 countries or so. And then I joined the World Bank because they were looking, there was a G20 project where they wanted to understand more how remittances work and the pricing of remittances. Since I had done that for then 10 years or so, I joined the World Bank, and then a year later, they asked me to work on the investment team for fintech.
Great. So let's sort of start maybe on the very sort of high level where we are in terms of funding to fintech. It was always in the past years sort of really trending upwards of amount of capital that went into venture capital, but the last quarter, at least on CB Insight, it has a little drop on amount of capital coming in. I'd love to hear a little bit your perspective from the investors' perspective, because I bet you co-invest and see a lot of other investors, whether we might be coming down in terms of trends on investing in fintech, or that will continue to go up on the interest.
Yeah, we are investing from a $30 billion balance sheet, so most of the deals we're doing are not so small. We're not typically a seed and not even an A-round investor. So most of the visibility that we have is more in, I would say, later rounds, growth capital and so on, B rounds maybe. I think there definitely has been a cool down, both in the amount of money that is invested in fintech, but also in terms of valuation. There's been a dramatic change, I would say, in the last 12 months or so.
So it's cheaper now?
It's still expensive. It is cheaper if you like, but it's certainly not cheap, especially not in certain parts of the world. I think if you're looking at the countries where fintech is most developed, which would be China and the US, I think, the valuations are huge, because you also have a lot of very exciting companies, you have a lot of investors, you have a huge amount of money that is looking for new deals. So we actually haven't done a deal in China in 3 years, I think, or 2.5 years, because the valuations are so high. And also, I think there's a lot of local money that invests much better than we can. But we are very active in Latin America, we are active in other parts of Asia, we're active in Africa where we find deals.
So if you sort of look at maybe the prices, from investment perspective, has come down maybe a little bit, but it does look like there are a lot of sort of offline financial services that are increasingly looking at fintech, and even I see very often people setting up sort of corporate venture fund in banks or insurance, and I bet this will all of a sudden increase the amount of capital back into the market. Do you also see that a lot of banks or insurance companies will sort of come in and be competing or be relevant in the space too?
I think definitely. I think the adage that banks will have disappeared in 5 years and be replaced by fintech companies is maybe a little over-optimistic. I do think banks will be there to stay. I think the role of banks will change a lot because of financial technology and also because of regulation. Because I think when we look at the role that banks play, and maybe insurance companies is similar, in fintech, everybody says the banks are so old style, they are so slow, they don't understand the millennials, they don't understand technology. But I think that underestimates, I mean, banks have been doing this for a long time, and 15 years ago, fintech was actually selling technology to banks, and it's gone full cycle. So it was technology for banks, then it became actually still technology for banks, but they couldn't sell it to banks anymore. So if you think about the origin of the first online lenders, there were actually people that started tech-based scoring systems. They were trying to sell them to banks. The banks wouldn't buy because they said, I'm not going to score my people with some data, I have a credit bureau. So to prove the concept, they started to lend themselves. So a lot of the big lending marketplaces and balance sheet lenders that you see online now actually started as companies that wanted to sell technology to banks. I think the big advantage that banks have because of their regulatory framework, they are still the main depository of money. And I think unless that would change, and I think it's not going to change, banks will always be there. I mean, at the end of the day, most fintech companies that you see that are now increasingly providing financial services rather than technology need to fall back to the banking system at some stage.
Yeah, so sort of understanding a little bit on the banks or insurance company side, because we have some companies that are coming into tech. Maybe just give us some honest answer here. Do you feel like in the markets that you're operating, right, like Brazil or Turkey or other markets, in particular in Brazil, I think would be of interest of this audience, do you feel like the banks tends to come in collaborating with the startup? They tend to come in shutting down the startup? What's the almost like the perception of the culture, because you are sort of looking from outside, right? So I'd love to hear some of your honest answer on that.
When we had our briefing, I told Betty I wouldn't give her an honest answer to that question, so here she is. Anyway, let me try and put it diplomatically. I think, of course, where fintech companies start to provide financial services, they directly compete with the banks, and banks are usually quite strong, and in particular here in Brazil, and of course they will not sit there and let this happen. They will try to do something about it. And I think there's many different reactions that you can see. You can, of course, just compete, you can collaborate, you can also use your regulatory leverage to do something about it. And I think you see a little bit of everything in most markets. I can maybe talk a little bit more about Turkey, so that's...
And then you can see whether it's similar to Brazil. You don't have to name banks or...
It could be. But in Turkey, the banks are quite strong. They have a lot of market share in most of the services, from the typical ones, accounts and so on, down to services that in the United States, for example, would be more covered by other companies, acquiring and so alike. And there the banks are fighting very aggressively with some of the fintech companies for market share. So recently, Turkey introduced regulated PSPs that were allowed to acquire merchants in the market, so for credit card payments. And the banks tried to prevent that first. They couldn't because the regulator wanted this to happen, or the finance ministry, I guess. So now there are PSPs, and now the banks need to decide, are we going to cooperate with these PSPs? Because in many cases they sign small merchants that the banks wouldn't work with themselves, or will I still fight them? And I think a lot of that actually goes ultimately into a mode of cooperation, and I think that's probably more productive because, as I said earlier, at the end of the day, I believe fintech companies have a lot to bring to banks because they understand technology better, they understand also a certain customer segment better, the famous millennials, which now make the largest part of the attractive and addressable markets for many banks. And I think they're also much, much better in delivering customer convenience than banks are. I mean, banks, whether you like it or not, but they are, if you look at the feedback from users, the usability of banks is horrible in many places. So I think banks can learn from fintech companies how to do all these things better. But as I said, at the end of the day, most people probably want their money to sit in a bank and not in a fintech company that was created 2 years ago. So I do think it would only make sense to cooperate. A lot of that will shake out in any case, but as I said, I don't think fintech companies will replace banks. I also don't think banks will replace fintech companies. I think at the end of the day, for example, if you use the case of online lenders, now I think in the developed markets where you have a lot of online lenders or marketplaces, you would be foolish not to go to a marketplace and get different quotes before you buy any kind of credit product, whether that's a mortgage or car loan or whatever. But at the end of the day, you're probably buying that product from a bank, or you're buying this at least from a regulated institution that may be more technology biased than a bank, but you still go back to the regulatory rail of financial services. I think that's a very clear example where ultimately cooperation is the only thing that really makes sense.
So question about, specifically about when you invest, because you did mention, for instance, some of the opportunities are fintech that collaborate with the banks, so you see definitely like one opportunity there. What are some of other like 2 or 3 opportunities if you're investing? You see like these are some of the areas that will be growing, and particularly in Brazil, but of course it'll open that up sort of cross-border because you look at so many different markets.
I think in general, Brazil is a very interesting market for financial services. For many reasons, the penetration of many financial services in the market, for example, home equity loans and car loans or car equity loans, even credit in some cases is still very limited. So there's a huge opportunity both for banks and fintech companies to extend the market share. It's also a very profitable market. The net margins on loans in Brazil are higher than in most other markets that we operate in. So I would think that consumer lending in Brazil should be a big opportunity. Of course, there's also a relatively high level of indebtedness, but there's still a large part of the population that is not using credit very much. I think in payments, there's also still a big opportunity. I think generally in emerging markets, the first thing that you see happening in fintech is probably payments, starting from very basic things such as issuing cards or acquiring merchants, but then also creating other things. I'm sure Bitcoin and other things will ultimately deliver different applications for consumers that will do very well here as they have in other countries.
We'll actually open for some question and answer, and maybe if Sam's still in the back of the audience, because you mentioned about Bitcoin, people might have a specific question about Coinbase or Bitcoin, and we can wrap a little bit more about the trends. The music is for you.
Hi.
Luz, microfone, mágica. It does work. Obrigada.
Hi, my name is Pedro from Roundpegs, and I was wondering about the fintech scenario. So, not regarding the banks competing with fintechs, but actually banks competing with each other in terms of how fintechs could become an opportunity to take over the market. Then I'm talking about bank as a platform. What are your thoughts about that?
Would you like to answer that? No, I'm joking. If I understand the question right, I mean, every market is different, of course, and in some markets you have hyper competition between banks, and in other markets you have a more long-established, relatively comfortable place for different banks and a relatively well-established ecosystems for the banks. And I think that's much harder to penetrate for fintech companies, because they usually penetrate the fringes because the banks are not so aggressive on the fringes. But at the end of the day, to get to the core, and Brazil may be an example for that, where to really disrupt consumer lending here, I think once you get to a certain scale, I'm not a banker, I don't claim to speak for banks in Brazil, but I'm sure there will be a reaction from the banks because that's their core business. They make a lot of money from it. So I generally think that if you're fintech companies, you can manage to grow your company while establishing a good relationship with banks. Even if you're competing with them, I think that's a preferable scenario than going into head-on competition unless you've already grown a lot. I mean, if you are Lending Club, maybe that could be a little bit different, because Lending Club essentially created a whole ecosystem for loans. No, in Lending Club you can buy any loan that you want. I mean, any size, any term, anything. But for most fintech companies, that's very different. You have typically a monorail product. You have one or two products. You're very limited. So that means your customer acquisition, for example, is very expensive. Take again the case of a lending marketplace. If you can only do loans up to 1,000 reais and a term of 6 months, and you go out and you try to acquire customers online, you will get a lot of leads that you can't service. So your leads will, or your customer acquisition cost will be very high because you're acquiring a lot of leads for products that you can't offer. So cooperating with a bank or with another regulated financial institutions that could buy these leads from you, I think is much more effectively than ultimately trashing the leads or putting them in a database and hoping that later you can expand your product suite.
Hi, so I have a question for both of you, so for Kay first, given that you are in charge of the Latin American area, do you see any specificity for each country, Brazil compared to Mexico or Colombia related to the fintech market? And then I would say almost the same question, what do you think about the Latin American behavior related to blockchain and Bitcoin?
Sure, so absolutely, there are significant differences, not only among countries in Latin America, but just regionally around the world. There are dramatic differences. I think the biggest driver of this is actually how progressive or how far along the appropriate regulator is in that country. I think there's a very direct correlation between how far along the regulator is, even in simply making statements about it, let alone actually issuing regulation, and how comfortable the average consumer will feel in kind of testing around with this new, whether it's a technology, digital currency, or anything else. So yeah, certainly for us, what we've seen, as I mentioned, in Brazil, there is some guidance on how digital assets will be taxed. There is not much guidance on what an exchange company, for example, is responsible for doing in protecting the consumer. So this is an area where I think actually Japan is a shining example of this, where they've recently come out with regulation and it's very clear what consumer protection is or is not in place. It's very clear what responsibilities the platforms or companies on top of the blockchain have. And because of this, the customer can make an intelligent decision if they are willing to explore or test the waters.
How would you rate the regulators in Latin America that you had interactions with?
Yeah, well...
What do you think are the best, which are the best countries and which are the worst countries?
I'll leave my answer less specific, but I will say I've actually been very pleasantly surprised, specifically with the regulators in Brazil, with how open they are to, frankly, sitting in the room with some guy from San Francisco who wants to tell them about a new technology they don't understand. So I think I've been very impressed with Brazil, with a few key regulators, the central bank, in their openness as well as their desire to understand and properly regulate this new space.
Very diplomatically answered.
Thank you.
Well done. To answer the other part of the question, I agree. I mean, in fintech, actually, regulation also plays a role, but then also the general environment for financial services plays a big role. If you look at activity, investment activity, and I think also startup activity, Brazil probably is, I think, the predominant fintech country in Latin America, and then followed by Mexico, I think. What is very curious to me is that in almost all areas, I would say Brazil is probably a year or two ahead of Mexico. But in the area of online lending, Mexico is much more advanced. You have much more companies providing loans online, much more marketplaces. Whilst the spreads in Mexico are actually much smaller than they are in Brazil. So you would think it would be much more logic to do this in Brazil than to do it in Mexico. And I'm still searching for the reason why that is. I mean, maybe to tag on to the regulators. I was very surprised that you mentioned Japan as an enlightened regulator. I mean, I think I work with many people that work with regulators a lot, and I think the Japanese don't get that praise very often, let's say. And I think in most emerging markets, especially the larger ones, so that's the BRIC countries, and for example, Colombia is also a good example, Mexico as well. I think the regulators are very enlightened compared to regulators that you have in some developed countries. I mean, they embrace new technology much more. I think they also care about financial inclusion, and that's why they are more willing to let things happen. For example, in Colombia, you now have an e-money institute that is very new. You have the same in Peru. I mentioned Turkey with a new PSP regulation. I think Brazil is also looking at various things. There are also conflicts, of course, in the different countries, because typically fintech companies innovate first and then regulators come and try to regulate. So you have many cases, starting from the famous one, which is M-Pesa in Kenya, where there was no regulatory framework and it became a huge global wallet, a huge national wallet. And then you have similar smaller cases also happening in most other countries that we see in Latin America. But I think it's really ultimately what you would think. I mean, Brazil is the largest and also the leading. Mexico is, I would say, a close second. Other attractive markets are certainly Colombia and Peru. I'm married to Colombia and I'm partial, so I think, I mean, Colombia has had very stable economy for more than 10 years, and the conflict has also calmed down a lot, and I think given to how stable Colombia has been, and also Peru, both countries. I mean, if you look at macroeconomic indicators, they're probably the strongest in the region. But the fintech activity in these countries, at least what we have seen so far, has been very limited. So if I wanted to find the cheap deal that we are always looking for as investors, I think you probably have better chances in Colombia or in Peru than you would have in Brazil or Mexico.
I'm actually going to use both of you for very quick, like, almost like hot or not, but most importantly is maybe thinking about like, has that gone through sort of mainstream or not, right? So let's try. Bitcoin.
Getting there.
Blockchain, definitely yes. Bitcoin, I'm skeptical.
All right. Millennium.
Well, hot, certainly, yes. Everyone is trying to serve this.
I agree. I mean, it's essentially, if you think about the definition of millennials, I mean, anybody that you would really want to target these days is probably a millennial. So I actually find the whole notion of millennials a little bit absurd, because it's probably at the moment the consumer segment that everybody need to be concerned about, irrespective of whether they have now different habits and they want to do everything online. I mean, if they would still want to do everything the same way than my generation wanted to, we would still be looking at millennials because they would be the most attractive segment in the market. So I mean, anybody wants to sell anything need to understand how their customers work, and so that certainly applies to millennials.
Yeah, I think to add to that, it's interesting. This ties to Aditya's talk earlier in the day. Millennials, this is the first time that there's been such a huge group of people with so many options. And if you don't get the product just right, you don't get the user experience just right, it's easy for them to just walk away. So it's, I think, something very new that companies need to pay more attention to. Obviously, as a small startup, you're able to do this, iterate much more quickly. But even for large, large banks, as an example, are doing much more, offering more services online. Obviously, if you require someone to go into a bank branch, a 20-year-old is just not going to go in.
There was, sorry if I tag on, but there was some very interesting research recently, I think it was even in the US, about whether people want to go to a bank branch or not. And of course, they never want to go to a bank branch unless it really matters, and then they really want to go to a bank branch. So it's also not as easy as saying, okay, we don't need bank branches anymore, everything can be done online, and that's a big problem for the banks. No, they have a huge network of bank branches, and in the past, certainly, and maybe still today, nobody knows, the bank branches were a huge competitive tool. So if you would shed all your branches now as a big bank, I think you would lose market share very, very quickly. So it's not so easy. I mean, they're closing some, they're keeping others open, but it's also a very, very expensive infrastructure. But I agree with you. I think that the biggest change that we see in consumer behavior is probably that the expectation of convenience is now much, much higher than it used to be. And the ability to change from one provider to the other is also much higher. So if you don't deliver the convenience, I think you're out much quicker than in the past.
Crowdfunding.
Yeah, I think certainly hot. I think venture capital as an industry is shifting, and you now, again, as an entrepreneur or as a small company, you have so many more options for where to raise funds from. There's recent regulation in the US specifically that enables this, and I think just globally this trend seems to be catching on. So certainly I would look to crowdfunding, facilitating a whole new generation of people that are able to iterate on ideas very quickly without having to worry about personal financial health.
I think we make a good panel because we have some very different views on some things. So I mean, this is going to be sounding a little bit maybe a little bit too technical, but I think there's a huge, what's called a principal agent problem with crowdfunding, especially in our space of venture investing, because I think most of the companies, if they can, they will try to get a value-added investor, no? That's typically an organized venture capital fund that has former entrepreneurs who have a great network of relationships and experience and so on. So they will find each other. The good companies will find the strong investors. So the not so good companies go to the not so good investors, and I think in a way they may also end up in crowdfunding. So what you have available in crowdfunding, I think, is typically the second choice of companies to invest in. They may still turn out to be huge successes. I'm not saying you can predict that, but I still see there's some kind of an adverse selection problem there.
Yeah, no, I agree with almost everything that you just said. I think you're right. Andreessen Horowitz, Sequoia, those are going to have the top pick of the top talent of a hot industry. I think crowdfunding enables the long tail of entrepreneurs that maybe otherwise wouldn't have the resources to build a project or even just to leave their current job and focus on something else for a couple of months. So I think you're right. The industry, venture industry, is not going to go away. It's not going to change 180 degrees. But I think there will be a new long tail of entrepreneurs that are able to experiment.
Unfortunately, we agree more than we thought. So sorry.
Okay. Last one, Brazil.
It's very hot. Yeah, you know, I think, as you mentioned, Brazil is definitely sort of ahead of the pack when it comes to Latin America. This is an economy that it would be foolish to not focus on for a company in San Francisco or anywhere else. If you want to be a global company, you have to focus very early on in Brazil. So yeah, I think Brazil, you have a huge economy, you have a lot of potential, and certainly I hope that we can serve the market very well. So.
I think that's obviously true. It's a huge market. A BRIC country has its share of problems, like many countries have, especially emerging markets. But I think Brazil has one thing going for them that many other markets don't have, and that is that most people like Brazil, for whatever reason. I mean, you talk to a guy from Russia, you talk to a German, as is in my case, or you talk to someone from, maybe not an Argentinian, but say you talk to a Colombian. They all would love to go to Brazil. They think it's a nice place. So that is something magical about Brazil that I think is a huge advantage, because if you have a choice to make an investment in Russia or you have a choice to make an investment in Brazil, at the end of the day, there's still some personal choice somewhere in your head that says, well, probably rather do it in Brazil.
Kai, Sam, thank you very much for participating on Trends and Hot or Not.
Thank you very much. Thanks for having us.